Hello and welcome to today's video. In this video we'll be taking a look back at how my Hargreaves Lansdown stocks and shares ISA portfolio performed over the month of November. I'll also reveal how much my £50,000 worth of premium bonds earned me at the end of this video. It's my biggest win so far, but I'll see how it stacks up against the best paying easy access savings account currently available on the market, so be sure to stick around for that. I'll be looking more globally in a minute, but I just want to say that here in the UK we're seeing a very strong divide currently. This season has been named the winter of discontent, and for good reason. We've seen massive strike action towards the end of the year, which is showing no signs of letting up. It really feels like we're at the tipping point now, where people are saying enough is enough. And frankly, I'm not surprised. Imagine being a nurse. It wasn't that long ago you would have had people banging pots and pans for you on their doorsteps, giving you the praise you rightfully deserve as you risked your lives doing the amazing work that you do. And then a few months down the line, you're told that you're supporting Putin by asking to be paid enough to not have to rely on food banks. I think it's unbelievable how unionised workforces are attacked, and can only imagine what the lives of those workers would be like if they weren't unionised. The ongoing rhetoric that gets bounded about that there isn't the money in these businesses is utterly ridiculous. Whether it be public institutions like the NHS that are chronically underfunded and mismanaged, or public companies that can happily pay shareholders but not their employees. Regular viewers will know that I suffer with a long-term health condition, so I have a lot of dealings with the NHS. I recently had an appointment with a respiratory nurse, and she was telling me the prices of their equipment. A disposable cardboard cup that fits onto the end of one of their pieces of equipment, which is needed for each patient, costs nearly £10 each. This is literally a cardboard cup. I can only imagine how many little gremlins there are like this within the NHS that eat up cash, and it comes down to higher management creaming off contracts. This is where the money is going, unfortunately, so I can see why there is anger when staff are told there isn't the money for a pay rise. This culture is unfortunately rife, and isn't hard to uncover if you do a little digging, as we've seen recently with the PPE contract scandal. So to all of you out there struggling on but taking a stand, I wish you the very best of luck for the future. I hope you win your battles, you deserve to. And for those moaning that the rail strikes will mess up all your plans for Christmas, it's looking like we may see snow soon anyway, so the country's going to grind to a halt regardless. Looking more globally, we actually saw a pretty positive month on the markets. US inflation looked like it had eased a bit, which inspired some confidence. Emerging markets saw strong gains as China looked like it may ease up some of its COVID restrictions. Restrictions seems like the wrong word to use after seeing how some of their population has been treated. Here in the UK we also saw a much stronger month after the initial panic over a looming hard recession had eased off. Although looking forward, things are still looking bleak. Food prices are still looking like they're yet to peak, and with the industry getting pounded from all angles, it's something that is looking to get worse. This is something I wish to start to address in future videos. I feel it's a major problem, but one we can all do our little bit to ease. Right, onto my portfolio then. As always, I'll start with income. My loyalty bonus was still painfully low at 38p. Looks like I'll be drawing my pension before I reach the £10 auto reinvestment again. I also received a £1.64 dividend from Centrica. This small dividend means my monthly average from dividends now stands at £6.82. I do aim to keep this above £10 through 2023 and then build up from there. I have paid very little into my ISA over these last few months, as I've been in limbo now for a little while in my personal life, so until I know for certain what lies ahead for myself in the near future, I've decided to hold back a little on investing into riskier options and even playing it a little safe. Since Liz and Kwasi decided to curl one out on the economy, my portfolio has been absolutely decimated. I've seen days where it's been down nearly £500. Luckily, with the issues I mentioned at the start of the video easing, I'm only down to just under £30 in the red on the whole, which is much better. It's still the usual suspects putting it down into the red, with the emerging market seeing more recovery, but not enough to pull itself out of the negative just yet. At least it's finally a promising sign. The other poor performer in my portfolio is Legal & General. LGen got hit massively by the mini budget as their exposure to the UK pension market saw them potentially facing a massive shortfall. LGen sees a lot of love as an income stock, as they have a fantastic track record and what was a solid dividend plan for the next year or so. I think the pension issue scared a lot of those that had invested for income, as the fear is if they have to shore up pension plans, then that money would likely come at the expense of dividend payouts. Expected dividend coverage sits at roughly 1.8, which although is far from the worst, sure isn't the best. Ideally you want a coverage of at least 2 times for a bit of peace of mind. It's still a company I have faith in though. They have a great track record. Time will tell how they manage external factors affecting their business though. Rolls-Royce also saw some gains throughout the month as confidence grew in the company. I made a video earlier in the month where I dive a little deeper into the potential for growth and possible hurdles for their future. I'll leave a link to that in case you missed it. With a new CEO due to take the reins of the company soon, it'll be interesting to see how they fare in 2023. Some of the main funds that pulled my portfolio up in November were the more US focused ones, like my UBS S&P 500 index and the Fidelity funds that I also hold. The Fidelity Index World Fund is on my chop list. I don't hold a massive amount, just over £320 worth currently, but I'm seriously considering chopping it in for some shares while the market's dipped. I am keen to diversify, so I think this could be a good opportunity. I'll run through the remaining holdings briefly now so you can take a quick look at how they performed over the month. As always, let me know what you've invested in this month, as it's always great to hear how you think things are looking for the future. So, on to premium bonds. Recent months have left me feeling more disappointed than Father Christmas after he breaks into your house only to discover that inflation has already eaten that mince pie you left out for him. I've only received £75 between August and November this year, with that full allocation of £50,000. December though saw my biggest win, £100. If that 50 grand was instead sitting in the best easy access savings account, which is currently around the 2.5% mark once you take out all the linked accounts or the ones with withdrawal penalties, I would have received just over £104. So finally my premium bond winnings come close to savings, but realistically you can easily beat 2.5% if you're willing to make some concessions to access. That's all for today. Don't forget to leave a like and subscribe for future content. I hope you all have a great Christmas. Stay safe out there. Peace.